This is Jim Emter, Ahn Company, Alexandria, Minnesota, with your closing grain and livestock comments for March 29th, 2018. Corn market today up 14 1/4, beans up 26 3/4, Chicago wheat up 5 3/4, Minneapolis wheat down 11, Kansas City up 6 1/4. On the week, corn market up 10 1/2, soybeans up 16 1/2, Chicago wheat down 9 1/4, Minneapolis wheat down 24 1/4, and Kansas City wheat down 12 cents. When you look to the overall tone, USDA ruled the roost today and gave us some friendly numbers for the grains. When you look to the corn, 88.026 million acres planted to corn, 88.98 in soybeans. Cotton came in at 13.5, all wheat at 47.3 million acres, winter wheat at 32.7, spring wheat at 12.6, a big increase there, and durum at 2.0 million acres. So when you look to the overall tone, I think the big question a lot of people are going to try to answer here over the weekend is, where do the acres go? We're about a million and a half short versus last year across the board, and that's a question the market's going to need to get somewhat comfortable with. I would not be surprised that as we work ahead, these acres find their way back into the corn and possibly more beans, but possibly the corn arena as well. As already today, I've had a number of producers talk about backing out of spring wheat a little bit and planting a few more corn and bean acres just because of the price relationship. So, you look at the opportunity here, the markets are back up towards the highs. When we look to corn, price counts remain off to July at 402 and then up to 424. So that is the next price count to zone in on if we can break 402 off the July. New crop, that put it in that 425 to 435 area. And those are areas that we can get to, but going to need some momentum to continue forward. Maybe this cold, wet weather can be an assister in doing that. But if you're going to trade a little friendly corn off the weather, you need to look at the bean market a little bit and ask yourself, do beans pick up some acreage here? And do we find our way back up to that 90-91 where the market thought we would be? USDA has a history of underestimating those bean acres in this report. So we'll watch weather next week. That's really going to be the driver. When you look to the cattle market here, down 225 in the live cattle, 372 1/2 in the feeder cattle, and lean hogs up about 32 1/2. On the week, you're looking at live cattle down 230. Feeder cattle down nearly only 10 cents in the March, but that's in the lead month contract, $4 to $4.50 in the deferred months where we're not up against delivery, and the lean hog market down 117 1/2. Average cash trade 121 live, 190 dress, so that's the focal point here. Unfortunately, I think today was a matter of funds needing to generate money from somewhere. Cattle were at the mercy of that. Generally, feeders do drop when the corn market rallies like this, and that's why we see the pressure. But we do look for cattle to put a bottom in here over the month of April and try to recover out of these levels. The hog market, on the other hand, very wishy-washy here. Hog and pig report came in right in line with expectations. And we'll watch weather trends as well as those weights, as well as exports next week. Hogs were less to be desired on the exports. Cattle had a good export day today. So another wild week coming at us this next week. We wish you all a happy Easter. I need to close with a disclaimer. Trading in futures and options involves risk of loss. It is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation. Just a reminder, no markets tomorrow on Friday. Have a happy Easter. We'll talk to you on Monday.